All right, let's dive into Groupon today. Everybody knows those deals, right? Popping up on your phone, great experiences at a fraction of the cost. But is it really that good? We're going to find out. We've got their 2024 annual report straight from the SEC.
And it's really interesting. We're not just looking at numbers. It's like a behind the scenes look at their strategies, what's working, what's not, how they're trying to keep up in this crazy market.
And speaking of keeping up, did you know 80% of their business is on mobile now? Crazy, right? Compared to a few years ago, that's a huge shift.
Mm.
But then there's this material weakness thing in their financials. Makes you wonder how solid their numbers really are.
That's a big deal. A material weakness, it means there's a flaw somewhere in their money tracking. More room for errors, maybe even misrepresenting their financial health. Definitely raises some red flags. How accurate is their performance, really?
Okay, so let's dig into those numbers. How much money did Groupon actually make in 2024?
Their gross billings, that's the total value of all the deals sold, hit $1.558 billion. Sounds like a lot, but it's actually a drop from 2023. Back then it was $1.645 billion.
Less money coming in. Not a great sign.
Ah.
What about the actual number of deals sold? Did they at least sell more?
Nope. Unfortunately, they sold 36.64 million units in 2024, down from the year before, which was 41.368 million. Fewer deals, less money, not painting a pretty picture.
So fewer people buying deals. Does that mean fewer people using Groupon overall? What happened to their customer base?
That's the key, right? How healthy is the company? Well, their active customers took a hit too. They ended 2024 with 15.432 million, down from 16.501 million in 2023.
Fewer customers, fewer deals, less money. It sounds like they're in a tough spot. Are they in trouble?
Based on these numbers, definitely a challenging situation. I mean, think about it. They've got competition from other online giants, and what people want is always changing. Something popular a few years ago might be old news today.
It's true. Everyone wants our attention or money. Hard to stay on top when the game keeps changing. Speaking of challenges, the report mentions this cost savings plan they started.
Yeah, August 2022, they started this multi-phase restructuring, trying to trim the fat, basically. Big part of that, workforce reductions.
They laid people off. That was tough. How many are we talking?
Approximately 11,150 positions globally, 3 phases throughout 2022 and 2023. And here's the thing. The report says this restructuring might actually disrupt their operations. They might not even save as much as they hoped.
That's a gamble. Cut costs, streamline, but you could lose valuable people, disrupt the whole flow. And all those mobile transactions we talked about, what if the app starts having problems? That seamless experience, gone.
Exactly. It's a tough balance. And most of the costs for the layoffs, that money's already been paid out. Severance packages, mostly. Real financial impact right there.
So they're spending to save, hoping it'll pay off later. But what about the human side of it? Will it be enough to turn things around?
That's the question, isn't it? And it's not their only problem. They also mention struggles with keeping current customers and attracting new ones.
Makes sense. You get a great deal, but if the experience isn't good, you're not coming back. And getting new customers, that's expensive.
Exactly. It's way cheaper to keep the ones you have than constantly chasing new ones. Loyalty is hard to find these days. Groupon needs to figure this out if they want to make it.
Like they say, a bird in the hand. But for Groupon, seems like they're having trouble holding on to the birds they have, and finding new ones is even harder.
Tough spot. And then there's that material weakness we mentioned. Remember, they admitted to a flaw in their financial reporting system.
Doesn't inspire confidence. What kind of flaw are we talking about? A little glitch or something bigger?
Report says it's about inadequate controls over complex manual calculations for certain month-end balances. Basically, errors could slip through. Their processes aren't tight enough.
That's worrying. Like building a house on a shaky foundation. They know about this weakness. Are they fixing it?
As of December 31st, 2024, they say it's not fully fixed. So, problems there, solution isn't.
Okay, so we've got declining sales, fewer users, restructuring going on, and potential errors in the reports. A lot of bad news. Anything positive? Any hope for Groupon?
Well, think about that mobile dominance. 80% of transactions on mobile. That means they're doing something right to keep up with how people shop.
True. They're keeping up with the times. Everyone's on their phones. If Groupon can make that experience good, they've got a chance.
It's a strength they can build on. The question is, can they use it to overcome all these other problems?
We'll have to see. There's more in this report that's worth talking about.
Let's hear it. What else got your attention?
Their marketing strategies, they're doing it all. Search engines, emails, affiliate programs, social media, even some offline stuff.
Casting a wide net, trying to reach everyone, everywhere.
Makes you wonder if they're spreading themselves too thin. Better to be really good at one thing, or just okay at a bunch, especially with all the messages people see these days.
Good point. They need to be smart about their marketing, make sure it's effective. Otherwise, it's just wasted money.
And speaking of potentially costly things, there's this third-party marketplace model. What's that about? Are they doing more than just deals now?
Things get interesting here. They're letting other merchants sell products on their platform, not just businesses offering deals directly anymore.
So more like Amazon, eBay,
Right.
anyone can sell stuff.
Kinda, yeah. Opens up new possibilities for them, new products, more ways to make money. But the report warns about more legal risks, too.
Legal risks? Like what?
Think about it. More sellers, more chances for problems, fake products, arguments with brands, customer complaints. Groupon could get stuck in the middle.
More business, but also more headaches, maybe even lawsuits. And speaking of headaches, the report talks about cybersecurity and data privacy. Big topics these days.
Huge. Any company online handling tons of customer data, they're a target. Cyber attacks, data breaches. A breach could be a disaster. Financially, reputation-wise, everything.
True. People care about their data now more than ever. One data breach and your customers might run to the competition.
And there are all these regulations they have to follow. GDPR in Europe, CPRA here in California. Protecting people's information. The fines for messing up can be huge.
So they're fighting hackers, keeping up with the law, all while trying to make money. Not easy.
Not at all. And then there's this tax problem in Italy. They had a ruling against them in December 2024.
Taxes. Never fun. Especially for a big company operating in multiple countries.
Exactly. These things can drag on forever, costing time, money, resources that could be used for something else.
It's a reminder that even simple things get complicated when you're doing business across borders.
Yeah.
Anything else in this report before we move on?
One more thing. Their executive compensation, they've got something called a clawback policy.
Clawback. That sounds kind of harsh. Is it like a punishment?
Not exactly. It's a way to get back money that was wrongly given to executives.
So if an executive gets a bonus based on numbers that were wrong, inflated, and then later corrected, they have to pay it back.
Right. Keeps things fair, especially if those errors were because of someone doing something wrong or being careless.
Okay, so we've got declining sales, restructuring, they're doing well on mobile, but legal risks, cybersecurity threats, tax issues, and even this clawback policy. A lot to think about.
It's complicated, that's for sure. Groupon's in a tough spot, dealing with internal problems and external pressures.
But we haven't even gotten to the big question. What happens next? Can they turn things around? Get back to being a leader in the online deals world? Or will they be another story of a company that couldn't adapt?
We'll look at their strategies and try to answer that in part 2 of our deep dive.
We just spent the last half hour talking about all the problems Groupon's facing. Fewer sales, layoffs, even worries about their financial reports.
Yeah.
But I gotta know, what are they actually doing about it? Are they throwing in the towel or are they fighting back with some new ideas?
Oh, they're not giving up. Not yet. In fact, some pretty interesting moves in the last year, like issuing convertible senior notes in 2024.
Okay, for those of us who don't speak finance, what are those and why would Groupon do that? Sounds complicated.
It's a way to raise money, basically. They offer investors debt, but it can later be turned into stock. A bit of a risk, but it gets them cash now without immediately making their existing shares less valuable.
So they get money now, but it could cost them control later if the stock does well. Two sides to that coin.
Exactly. Shows they're willing to gamble, to keep things running, maybe even grow in the future. But yeah, means they got to turn things around.
If they don't, those notes could really cost them down the line. High stakes.
Speaking of high stakes, remember SumUp, that mobile payments company?
Yeah, vaguely. Didn't Groupon invest in them a while back?
You got it, 2023. But it hasn't been a smooth ride. Same year, they had to remeasure that investment, lost $25.8 million, just like that. Then they sold part of their stake, got $8.8 million back.
So they lost money on paper, but also got some cash back by selling some shares. Mixed bag.
It is. Makes you wonder about their investment strategy. Are they picking the right companies? Making smart, long-term decisions? Investors are going to be watching that closely.
It's like trying to solve a puzzle. Are all these pieces part of a plan, or are they just making random moves out of desperation?
And speaking of moves, there's one more I think we should talk about. Their agreement with Major Rocket LLC.
Major Rocket. Sounds more like a comic book thing than a company. What's the deal with that?
It's a new agreement signed just a few days ago, March 11th. Incentive marketing agreement. Seems like Major Rocket will be a big part of Groupon's marketing, especially in North America.
So, New marketing partner. But what's so special about them? What can they do that Groupon can't?
From what I see, Major Rocket will be focused on getting contracts for what Groupon calls enterprise offerings.
Enterprise offerings. Does that mean they're going after bigger companies? Not just regular people.
That's what it seems like. Maybe they're shifting focus a bit, realizing the market for those individual deals is getting too crowded.
Interesting. Trying to reach bigger clients with more money makes sense. But why would Major Rocket want to partner with a company that's struggling?
Here's the thing. How much Major Rocket gets paid depends on how well those enterprise offerings do. Hit certain targets, they get big bonuses.
So if Groupon does well, they do well, incentivizes them to make it work.
Exactly. But there's a twist. Groupon can pay them in cash or company stock, up to 954,000 shares even.
Whoa, that's a lot of stock potentially going to a marketing partner. Shows a lot of trust, but also pretty risky for Groupon.
It is. Major Rocket succeeds, they could own a big chunk of the company. They fail, Groupon loses ownership without getting anything back.
Big gamble.
Yeah.
Makes you wonder, if Major Rocket's so good, why partner with a company that's having problems? Do they see something we don't? Some hidden potential?
Good question. Maybe they believe in the Groupon brand, the customers they already have, see a way to use that in the enterprise market.
Maybe they're the turnaround experts, the ones who come in and fix struggling companies, like a business reality show almost. We'll have to see if it works.
It'll be interesting, that's for sure. But remember, this doesn't magically fix all their other problems. Competition's still there, those internal control issues. Technology's always changing.
Yeah, it's like they're climbing a mountain, juggling chainsaws at the same time. Impressive, but also kind of scary.
Before we get too caught up in the drama, there's more in the report that's worth mentioning.
Oh, love details. What else did you find?
Remember those cost-cutting measures? It wasn't just layoffs. They've been changing their real estate, too.
Real estate, yeah. Big expense for any company. Especially if you've got offices in expensive places. What are they doing? Downsizing. Going all remote.
Not all remote, but they've been getting out of some leases or changing them. Like in 2023, they paid $4.25 million to end a lease in North America. And in 2022, they had to record an impairment charge, basically admitting some of their leases had lost value.
So they're tightening their belts in more ways than one. Trying to be more efficient, cut costs wherever they can.
Exactly. Getting rid of anything that's weighing them down, including their physical spaces. They even paid $9.6 million to end their lease at 600 West Chicago early.
Wow, that's a lot of money just to get out of a lease. But I guess if they really believe they'll save more in the long run, it might be worth it.
It's a calculated risk. Shows how important real estate decisions can be, especially now when so many people are working remotely.
The old school office isn't as important as it used to be. Companies are realizing they can save a lot of money by being more flexible.
Speaking of finances, remember those convertible senior notes? Well, they've got other debt too, like their 6.25% convertible senior secured notes. Those are due in 2027. They issued those in November 2024, raised $197.3 million.
So they're not afraid to borrow money to keep things running and fund their plans. But debt can be a problem, right?
Of course, it comes with interest payments. Eventually, got to pay it all back. The report says they're treating these notes as a liability right now. They've already taken out $7.8 million in transaction costs from the principal amount.
So even raising money through debt costs money. It's a balancing act. Getting the funds they need without getting crushed by debt.
They also have a credit agreement, like a line of credit. Gives them access to more money if they need it. They've changed this agreement a few times, most recently in March 2023.
Sounds like they're constantly adjusting their financial strategies, trying to find the right mix of debt, equity, and other tools to keep things moving.
It's always changing, that's for sure. And speaking of changing, remember all those layoffs we talked about? Well, they're also doing some things to attract and keep good employees.
Oh, really? So it's not all bad news on the employee front. What are they doing? Free lunches, massages.
Not quite, although that would be nice. They actually outline their human capital strategy in the report, focus on things like people and culture, diversity, equity and inclusion, and compensation and benefits.
We hear those words a lot, but what do they actually mean for Groupon employees? Is it just talk, or are they actually doing something?
Seems like they're really trying to get employee feedback. They did company-wide surveys in 2023 and 2024 called Transformation Truths. Wanted to know how employees felt about all the changes happening.
That's smart. When things are changing so much, got to keep people happy, address their concerns.
They also talk about ethical standards, biannual training on their global code of conduct, anti-corruption stuff, respectful workplace behavior.
Important stuff, especially these days when everyone's watching how companies behave.
Shows they're trying to create a culture of accountability. They even mention career development programs, training for managers on things like unconscious bias and respectful workplace practices.
Good to hear they're investing in that. It's one thing to talk about diversity and inclusion, another to actually do something about it.
They also have an internal talent mobility process to help employees try different roles within the company, and an employee referral program to encourage hiring from within.
Sounds like they're trying to make it a good place to work, where employees feel valued, have opportunities to grow, even with all the restructuring happening.
It's a balance, right? Cut costs, but also invest in your people. It's easy to forget that behind all these numbers and strategies, there are actual people whose lives are affected by these decisions.
That's true. And happy employees usually mean more productive employees. So it's in Groupon's best interest to create a positive work environment.
Now let's talk about their brand.
Ah, the Groupon brand. Deals, discounts, but isn't that a double-edged sword?
Exactly. The report says a strong brand is key to their success. But they also know brands can get stale, especially if they don't keep up with what people want.
It's not just a logo or a slogan. It's about trust, reputation, consistently delivering a good experience.
They're focused on that positive customer experience across all their platforms. Remember, online reviews, social media, word of mouth is powerful these days.
Yeah, one bad experience can go viral and really hurt a company. Every interaction with Groupon has to be good.
And they're focusing on quality, relevant offers, not just the biggest discounts anymore. Deals that people actually want, things they'll value.
Finding that sweet spot, a good deal, but not feeling like you're getting ripped off.
And even then, things don't always go perfectly. The report actually has a whole section on litigation risks, all the lawsuits and disputes they've been involved in.
Uh-oh, lawsuits. That doesn't sound good. What kind of stuff? Shady businesses suing them? Angry customers who feel tricked?
A little bit of everything. Patent claims, intellectual property stuff, consumer complaints, contracts with merchants and vendors, employment claims, even securities law stuff.
Sounds like a lot. I guess when you're a big company operating in different countries, lawsuits are bound to happen. But that's got to be costing them a fortune in legal fees.
It's expensive for sure, and time-consuming. The report says these legal proceedings are considerable, and the outcomes are often uncertain.
So it's a constant worry, a potential drain on their resources.
Yeah.
Even successful businesses aren't immune to legal problems.
And sometimes those legal issues go beyond just money.
Oh. Like what? What other kind of legal problems are they dealing with?
One that stands out is how they classify their workers. Remember their human capital strategy. Seems like they've had issues with whether certain workers are employees or independent contractors.
That's a big issue these days.
Yeah.
Especially with all these gig economy jobs, the line's not always clear.
Exactly. And getting it wrong can have serious consequences. Back taxes, fines, even lawsuits from workers who feel they were misclassified.
It's complicated. No easy answers. Seems like Groupon's trying to walk a tightrope, dealing with these legal and ethical questions, while also trying to make money and keep a good reputation.
It's a lot to juggle. Shows how important it is to think carefully about these decisions that affect both the bottom line and how they treat their workers.
Okay, so we've covered their financial moves, their employee strategies, legal stuff, and their brand. Anything else before we talk about Groupon's future?
One more crucial thing, technology.
Right. We talk about mobile, but
Yeah.
technology is way more than just apps and websites.
Yeah.
How's Groupon keeping up with all the changes? Are they investing in the right things?
They know it's important. The report talks about investing in cloud technology, network infrastructure. Gotta handle all that online traffic.
Makes sense. So many transactions online, they need a system that can handle it. Nobody wants a website that crashes or a glitchy app.
But it's not just about size. They're focused on security, too. Remember those cyber attacks?
Oh yeah, hackers are always out there, looking for weaknesses.
The report mentions intrusion detection tools, anomaly detection, working with security companies to test their systems. They're even doing regular cybersecurity reviews with their board of directors.
That's good to hear. They're taking it seriously. A data breach could be a disaster for them and for their customers.
But they're also realistic. The report says their efforts may not be deployed quickly enough or successfully protect their systems against all vulnerabilities.
It's a constant battle, staying ahead of the bad guys, and with technology changing so fast, it's tough to keep up with all the new threats.
It is. Shows that even with the best technology, the best security, there's always some risk online.
Okay, so we've covered a lot. Finances, employees, legal stuff, technology. It's all connected. But the big question remains, can Groupon make all this work?
We've seen Groupons in transition, big challenges, but also possibilities.
Like they're at a fork in the road. One path leads to success, the other, well, not so much.
But with all this information, we can start to get a better sense of what the future might hold.
All right, time for the million-dollar question.
Mm-hmm.
What does the future hold for Groupon?
Can they come back? Defy the odds? Or will they become another story of a company that couldn't adapt?
We'll explore those possibilities and try to make sense of it all in part 3 of our deep dive. So we spent the last hour going through Groupon's 2024 annual report, declining sales, fewer active users, restructuring, even that material weakness in their financial reporting. But we've also seen some positives. Their mobile dominance, all those different marketing strategies, and that interesting partnership with Major Rocket. So what's the final takeaway? Can Groupon make a comeback?
Well, predicting the future is tough, especially in business. But looking at everything we've learned, I'd say Groupon is definitely at a crossroads. There's a path to success, but it's not easy. They'll need to be smart and get a little lucky along the way.
No guarantees then.
Yeah.
But what would a successful future for Groupon look like?
Imagine this. They go all in on mobile. Make the app even better, easier to use, maybe even personalized recommendations based on what you like and where you are. Use all that data from those 80% mobile transactions to really understand their customers.
So they become a data-driven company, using their mobile strength to figure out exactly what people want.
I like that. What else? They get smarter with their marketing. Focus on the things that actually bring the most money. Remember, we talked about them spreading themselves too thin. Pick the winners and go all in.
Right. Quality over quantity. Targeted and strategic.
Exactly. And those enterprise offerings with Major Rocket, those need to be a hit. If they can get those big companies on board, that could be huge. Think about it. Big corporations using Groupon for employee perks or to impress clients. That's a whole new level.
It's risky, but it could change everything. They could become the go-to for businesses of all sizes. But what about those legal risks we talked about with the third-party marketplace model?
Those are real. They need a system to make sure they're working with good merchants, handling complaints, protecting themselves from getting sued. It's a balancing act, finding a way to grow without taking on too much risk.
And they can't forget about that material weakness in their financial reporting. That's a serious problem they need to fix.
Absolutely. They need to show investors they're taking it seriously, making the necessary changes to their processes. Transparency and accountability are key to rebuilding trust.
So Groupon's got their work cut out for them. But they also have some good things going for them. Even if they do everything right, is it enough? I mean, the competition is fierce.
It's true. They're going up against some of the biggest names out there. Amazon, Google, Facebook. But Groupon has something those guys don't. Brand recognition.
That's true. Everyone knows Groupon. Deals, discounts, that's a good foundation to build on.
Exactly. If they can use that brand recognition and keep up with what people want, they might just find a way to succeed.
It's not about taking on the giants directly. It's about finding their own space, their own unique value proposition.
Focusing on what they do best. Connecting people with experiences, businesses with customers, but doing it in a way that's relevant, engaging, and trustworthy.
Not easy, but not impossible. You know, after looking at all this, I kind of want to see them succeed. It's like rooting for the underdog.
I get it. We love those comeback stories.
Like a business version of a sports movie. The team everyone counted out comes back to win it all.
And even if they don't get that perfect ending, it'll be interesting to see what happens. They're a good example of the challenges and opportunities all businesses face these days.
It reminds us that success isn't guaranteed. The path forward is never easy. It's about tough decisions, adapting to change, always trying to stay ahead.
And sometimes it's about embracing the unexpected, taking risks, finding new partners that can change everything.
Well said. And to our listeners, keep exploring, keep questioning, keep diving deep into the world around you. We'll see you next time.